Welcome back. And I'm so excited you joined us for this three-part series that we're doing all about S corporations. This is one of my favorite topics. And admittedly, this is one of the most commonly used tax strategies that we have in our arsenal to help you save money in taxes. There is no question that you have the potential to save thousands, tens of thousands, or greater implementing what you learn in this episode. So make sure you get your notebook ready and you're ready to listen to all three parts because they all work in conjunction. So let's start going in right now on S corporations. So by now, you've probably been approached by a friend or fellow business owner, or maybe you're exploring tax TikTok and you've been told that you should probably be an S corporation, or this is like the greatest thing ever to be legal by the IRS. Uh, the S corp can definitely save you money in taxes, but first we want to make sure that it actually makes the most sense for you because it's actually not a one size fits all thing. As with any strategy, you have to make sure it makes sense for you. So here's how you know if it does. So actually, let's back up. Let's talk about how an S corp actually saves you money. So as a typical sole proprietorship or a single member LLC, you currently pay income tax on what you make in profit, but you also pay this hidden little self-employment tax that is about 15.3% of your profit. So here's one way to check. If you have done a Schedule C in the past, which is a single member LLC sole proprietorship, go to your most recent tax return. If you have filed your business income before, go to your most recent tax return and see how much you paid in self-employment tax. It is on there. And I'll bet you anything that the amount that you owed is roughly close to that amount because most people don't take it into account. They forget about this thing. And most people don't even know that it's there until they find out they owe money in taxes. So you are actually taxed as a sole proprietorship or single member LLC. You are taxed your income tax rate plus 15.3% in payroll taxes / self-employment taxes. They're really payroll taxes. They are the employee and employer share of payroll taxes. And they call that the self-employment tax. So why does that matter? Shannon, why are you telling us this? Because that is the tax that you save when you go S Corp. So instead of just taking your profits and paying yourself by doing transfers from your business account to your personal account, you're going to, as an S corporation owner, you would have to pay yourself a reasonable salary through payroll as an employee, meaning you would get a W-2 and you would run it through payroll like any other employee, get a paycheck, et cetera. Now, why do we do that? Because the amount that you're paying yourself in salary is subject to that 15.3%, subject to those payroll taxes. The amount that you have that's not salary. So let's say if you have a $100,000 profit, you pay yourself a $40,000 salary and you have $60,000 that represents profit other than salary. That $60,000 does not have the payroll tax applied to it. So you're saving yourself 15.3% of the portion that is not your salary. So really, if you're running the math on your business right now, you're probably going to come to the conclusion that you would save money as an S corporation. Most people do, but we're going to get into really the levels of when you should start thinking about that. So a small business owner making six figures in profit can easily save tens of thousands of dollars if they optimize this strategy. And now, if you're running the math, you're probably thinking it makes sense for you, but let's go through some examples of strong candidates for this S election. Now, the first thing we look for in a really strong candidate for the election is an existing business entity. So here's the thing. If you're a sole proprietorship right now and you have no LLC and you've just been operating as a sole practitioner, sole proprietorship, then you cannot jump levels to S Corp. And in fact, the S Corp is merely an election. It's a tax election. It is actually not an entity type. It is not an entity type. So if you hear someone say, I am an S Corp, what they should technically say, to be technically accurate, is I am an LLC taxed as an S Corp, or I am a C Corp taxed as an S Corp. Because at the state level, you establish an LLC or a corporation. That is how you start this process. You must establish a business entity at the state level. And then you can apply this S election on top of it. I always refer to it with my clients as an outfit on your business. So there's no such thing as being an S Corp or filing for an S Corp when you first get started as a business owner. So what you want to do is establish an LLC at the state level or a corporation at the state level, depending on what's more advantageous to you. And you want to talk to your accountant or your lawyer about what makes the most sense for you. But you start there. Then you file for this tax election called the subchapter S. That's what we call it, the S Corp election. So we want to make sure that you have an existing business entity in place in order to take advantage of this because it's required. I mean, you cannot purely just be an S Corp. Now, the second thing that we look for is profitability. Profitability, because electing the S corporation comes with some additional responsibilities. Okay, you need to file payroll. You need to keep bookkeeping up to date. You also need to file an additional tax return. So instead of your Schedule C that you're used to, where you just insert a couple pages into your personal tax return, now you have to write an entire book. I always refer to the tax return, by the way, as a book with multiple chapters based on how you make money. So now we have an entire new book to write about the business's story. So we have an entirely separate tax return called the 1120S, S as in S Corp. And we have to complete that. Now, spoiler alert, the fee for an S Corp return is much greater than typically a personal return. It's more complex, it's more complicated. It requires a whole lot more effort on the part of your tax preparer. So in that case, you're going to be paying probably over $1,000 to have your S Corporation return done. And there are just costs associated with maintaining your S Corporation to have the systems and processes in place to handle it. So we recommend that your business be generating a profit of at least, I would say, $40,000 to $50,000 consistently to benefit from the election. Now, you might be thinking, well, Shannon, I'm on track for that this year. Okay, great. Let's think ahead. And I'm going to guess that if you're growth minded and you're trying to grow your business, if you think that you might cross $50,000 this year, then you may want to elect the S corporation out of precaution. And then that beyond that, you're just going to grow from there. But if you have a business that is, uncertain, relatively unstable, maybe it's seasonal, maybe you were severely impacted by the pandemic, who knows, and you're not sure if you're going to be able to sustain that type of profit level, then that's okay. So make sure that you're profitable if you want to take advantage of this tax strategy, because the more profit you can, safeguard from that self-employment tax, the more that you're going to save. So we recommend that if you're showing a consistent, or you're expecting to show a consistent profit level of that amount, that you consider the S Corp election. So finally, the last thing that we look for is that you have updated and complete books and records. Now, I'm kind of a stickler, admittedly, I'm kind of a stickler for this. So if you come to me and say you want to file, I'm going to ask you how you're doing your bookkeeping. Most accountants, and full disclosure, most accountants will probably just file the paperwork for you and say, have a nice day. We go through an entire process with you to make sure it's a good fit and to make sure that you've got all the resources you need to implement it successfully. So because we put so much care into making sure that you're all set with it, we do ask a lot of questions on the front end. And one of those is how you're keeping your books. So if you are just keeping your books on a spreadsheet, I would highly recommend upgrading to a platform like a QuickBooks. It doesn't have to be QuickBooks, but I would recommend enhancing that process a bit more, hiring a bookkeeper perhaps, because we want it to be as professionally done as possible. Because here's the thing, S corporation owners are held to a higher standard, held to a higher level of expectation. And the IRS knows that you're taking advantage of this tax strategy. So in a sense, it's kind of like the IRS is letting you go to this really glitzy, glamorous party, and the least you can do is dress nice. The least you can do is show up at your best with all of your ducks in a row, all of your stuff organized, all of your, showing up in your best attire, in case anything gets called into question, right? So we want to set you up for success. So how we do that is make sure that you've got the right books and records in place. So why do we care so much about this? Well, Like I said, most accountants will literally just file the paperwork for you because you asked them to, and send you on your merry way with no guidance or any type of, you know, help in setting this up and implementing it. So here's my analogy. You guys know I love these analogies. So when you have an LLC, it's kind of like taking home your first pet goldfish. It's not too much to maintain. It's nice to have something with a name and something that you can take care of that's relatively low maintenance. Okay. But when you have an S corporation, you have just upgraded to German Shepherd puppy. And there's more to it than just having it exist in your home. You have to feed it, you have to take it out, you have to take it for walks, and you need supplies to make this happen. So, in order to get the best benefit out of your new uh new furry friend, you need to make sure you've got supplies. You have a leash, you have a kennel, you have a bed, you have a dog bowl, right? So these are the things that the accountant typically will not do. Typically an accountant will leave you the puppy on the doorstep and say, "Have a nice day." And I can't say that enough because I want you to know that it's really necessary if you are going to hire an accountant to do this that isn't us. I encourage you to ask them questions about payroll, about an accountable plan. We're going to get into all of that in parts 2 and 3, but ask them questions about these elements that you're learning from me today, because I guarantee you that if you don't ask, they may not tell you about these things. So just make sure that you're always walking in informed and know what you're getting yourself into by adopting this new type of tax strategy. There is a level of responsibility associated with maintaining this type of entity, and it's important that you understand that. So I know you probably still have lots of questions on how this whole thing works, what it means for you as a business owner. And that is why we have 2 additional parts to this series where we're going to walk you through, okay, I'm ready to file for an S corp. What do I need to do? What do I need to keep in mind? You mentioned I have to pay myself a salary. Well, how do I figure out what that is? And how do I figure out how to run payroll and all of this stuff? And how do I save money in taxes? Well, we got you. 100% we got you. So we're going to talk about how to use the S corp to your advantage, minimize the likelihood of an audit, and maximize your tax savings with it. So if this sounds like an S corp might be a good fit for you, if you think you meet all of our criteria, 100% please text me the word S corp to 860-609-6374. I would love to talk to you more about getting this filed for you, getting you set up for success, and walking you through all of the elements that we're going to talk about in this 3-part series together so that you can just roll with it, start saving money, and keep more of what you earn, right? So I'll see you in part 2 of this series, all about how to pay yourself that reasonable salary. I'll stay tuned, and I will catch you next episode.